Hey everybody, Dave Bartosiak, Dave's Daily Dive. Could can we ever get sick of all-time highs? All-time closing highs here for the market. You got to be happy about it. I don't care who you are. One thing though, so nice day for the market. 8.7 points, good for 29 bips here on the S&P 500. Closes the day 29, or I'm sorry, 29.73 is the close. Just really just 2.2 off of the high. Incredible. This is something I was concerned about before. Was this little gap, and I wrote about it, but maybe you don't have to be as concerned in the intermediate term because this is why. A little bit different. Yes, gaps get filled all the time, 100%. I get it. But sometimes, if that gap is not in uncharted territory, the market's not so eager to come down and get it. Now, what do I mean by that? Well, let's look a few days back, right? Hop in a time machine, forget that this ever happened. Uh, Pretty much, virtually uncharted territory for the market near what were all-time highs. Market gaps up big, had to come on down before going higher. Now, what we have today is you have this gap over the weekend, but this is an area we've already seen in the market. So while eventually that gap will get filled someday, sometime, did it necessarily have to happen this week, right? Because we're sort of testing these previous high levels, and that's really where the market's attention has been, this sort of 29.65 area. Really tight, high and tight. That's where we're at right now. Still, real positive day, I think. Glad that, well, I mean, we're I think in the after hours we're already back up at the highs. So overall, pretty nice picture there in the S&P 500. Eventually, what I'm going to do is draw some nice fibs, give you some upside, extensions of where this could possibly go. But I don't want to get I want to get too ahead of myself here. But I'll definitely have some ideas for you when earnings season kicks back around. Probably going to get some chop, but now that we know the Fed's on our side, things are looking good. So it's going to be an interesting July coming off the heels of a pretty good June. I want to also look at gold again, just because I looked at it a couple times last week, and now a really big reversal to the upside here on gold after a few days of some trouble. I remember this is a fundamental move. Compare gold prices to yields, and you're going to get an idea why this is going to happen. As we're pricing in these cuts from the Fed, you're going to see this more and more, and that is gold having a good day, which means GDXJ is going to have a good day, GDX is going to have a good day, and anybody who's long gold is going to have a good day. Okay, so today was no exception. Interesting to see just a few days of pulling back, and then all of a sudden we're back to the races. Let me draw some fibs here for you folks. See what we got. So let's just go from, let's just do this move here. Still a little bit shy of that fib. I'm sure if I had a, well, this is spot, right? So I'm looking at spot gold. A little bit of congestion in June. That really big wick, that spike up there on the 25th. Retreated a little bit. But today's move higher, completely engulfing that downside yesterday, pushing even higher still. I'm expecting a little bit of a breakout here, as I'm sure lots of those gold bulls are. But really, the fundamental drivers behind this, I think, this move is not something that's going to happen over a 1 month period and all of a sudden it's going to be over. This is going to be a story that we're going to talk about for months to come. Really, it'll keep popping up. Last thing I wanted to look at here, VXX. So I know this is not the same as here. Let me do the good old VIX, right? So you can see, because this is more relative, right? If you look at VXX, that's a derivative product, so you're going to have that continuous downside. So if you want to give yourself an idea of where volatility is historically, you got to blow it out and get a little bit bigger and take a look at the VIX. And here you see that the market volatility has been coming down. Really, the last time we were nervous about anything was early in May. Of course, you all knew that because June was so great. But I was talking to somebody else about this today, and I was like, we need to start looking back back in the summer, I think it was 2017, where volatility just, kind of in the doldrums for the most part, and you get that kind of slow bleed higher, which makes for a boring trading day because it's not whipping around a lot. But I think if you're longer term investor in this market, you got to be happy to see something like that. We want some calm. So you could go ahead and find a few really good names to add to the portfolio and not really have to worry about it. Who are those names? I ran the screen today for Zacks Rank #1 stocks that are breaking out to new 52-week highs, and I had 25 names. It's been a while since I've seen that many names. Now here's one of them. Bruker, BRKR. Again, these are all Zacks Rank #1 strong buys. That means they have earnings trends, very positive earnings trends. Here you can see, look at this move. Coming from the lows with the rest of the market, breaking up above its 50 and 200-day moving average, pulling back to support at that 50-day, the end of April, and they did it again here in June. So two really strong moves there. Retracements which were met with lots of buying power. But volume's kind of creeping down, save for a couple days ago. Now, I might be worried that that's an exhaustion of buying up here, right? You get that last big push and then run out of gas. I think overall, volumes are gonna creep down here, especially as we get into the dog days of summer. But really nice, strong earnings trends there for Bruker. Maybe wait for a pullback again to that 50-day. Seems a long way off with the 50-day all the way down there at 43.48 and the stock trading up over 50. Next one I got for you is CASY's General Stores. If I type it in the right place, there it goes. CASY's General Stores, gaps get filled, so we do have to worry about this gap here from 134.96 all the way up to 142.82. And have had a little bit of volatility intraday here. As you see, the trend overall has been relatively strong. But you're getting a day like today where, some selling here at the top. That's good for folks waiting on the sidelines for something to develop there. But not good for the folks playing the breakout there in CASY's General Stores, ticker CASY. The next one we're going to have for you here is Cummins, CMI. And here's a stock that's kind of hovering near those highs. So a little bit of a consolidation up near the 52-week high should not alarm you as much as a big spike up that goes parabolic. If it's sort of lingering there while it has those positive earnings estimates that are helping it move higher, that's a good thing. Remember, all these stocks have that Zacks Rank #1 strong buy, so that means that their earnings estimates have been moving to the upside. Analysts from all over the place have been pushing those numbers up to help underpin the movement in price. So if you see something that's a Zacks Rank #1 strong buy and it's been lingering around a little bit near the highs, it's not a terrible thing. It's not that a reversal is going to be imminent. I know folks would probably be more comfortable if it came down to this 50-day down at 164, but if you notice, stock doesn't really have a tendency to linger on that 50-day for too long. This is one that kind of swings a little bit deeper, in this case all the way to that 200-day moving average. At the start of June, it's been a nice little run up, but you don't have to be afraid of it. Why? Again, because it's a Zacks Rank #1 strong buy, so you're going to have that support on the earnings front. Then we got Illumina, ILMN. Pretty strong breakout here also. Now look at this. So this is the previous level here, this $340 level. Provided all sorts of selling pressure there. Broke out from there, and now it's hanging out near the highs last seen in September. So what are you folks waiting for here? You're waiting for a nice strong day on heavy volume. Go ahead and jump on board the Illumina train because it's breaking out to new highs when it does that. And look at the last time. I mean, this is a stock that was $121 in December of 2016. Yes, that feels like a million years ago. A lot has changed since then, right? But just to give you some perspective on the run that this stock can take, and the further out you go, the more impressive it becomes. So as long as that earnings trend stays intact, you shouldn't be afraid of these multi-year bullish moves in these stocks. You really shouldn't. Because if they're a Zacks Rank number 1 strong buy, it means that the earnings trend is there to support that action. Now the last one is Kelly Services, ticker KELYA. Trying to get back to previous glory here. A gap down and forget about it in May of 2018, right? That seems like a gap that was never going to get filled, but all of a sudden that should be on your radar. So if you're looking at the stock, that's 28.08. So 28s, expect that to be a firm area of resistance for the stock, but also it's going to attract this price action here over the next several weeks. Got a nice little golden cross here, and I'll get into my beef with the golden cross later, like this, right? Because you get a lot of whipsaws. You get some, well, that last one wasn't, but you get some false flags here, right? And essentially the mathematics is such that when a stock does go from being lower to being higher, eventually they're all going to show that golden cross, but that doesn't mean that every golden cross is that significant, right? And it's not. But the point is, intermediate term moving average, like the 50-day, is moving away from the 200-day moving average, and that, my friends, is a good thing. Here, however, you do have a horizontal slope to the 200-day. Basically tells you, well, it's kind of been range-bound here for a while, so there is a little bit of concern that this is the largest blue mark I've ever made. A little bit of concern that this is the top end of this trading range here that the stock's been stuck in, for the better part of the year, a little over a year. So just something to watch out for. But again, Zacks Rank number 1 strong buy, so it has some force behind it. The earnings estimates are moving higher, which could help this get to that $28 level and beyond. That's all I got here for you today on Dave's Daily Dive. This is probably going to be the only one of the week since we've got a holiday shortened week, but I will talk to you folks soon. Have a good one.